Tonight on Need to Know, cryptocurrency is dominating financial headlines and Bitcoin stories are leading the pack. We've got your crash course on Bitcoin just ahead, what it is, how it works, and whether it's dead or very much alive. Need to Know starts right now. Kodak made news when the former photo giant announced it will launch its own Bitcoin-like currency later this month called Kodak Coin. Kodak joins the cryptocurrency craze at a time when all eyes are on the market leader, Bitcoin. The digital currency saw a surge in 2017, yet some investors and researchers question its viability long term and whether the Bitcoin bubble, as some call it, will soon pop. Joining me at the desk to break it all down is Josephine Wolf, Assistant Professor of Public Policy and Computing Security at RIT, and Gary Palmer Jr., founder of Bitcoin NYS and Minting Coins. And welcome both of you to the show. It's great to have you here.
Great to be here.
Thank you very much.
So much hype. People have likely heard this term Bitcoin a lot in the news as of late. And I'm sure that some people are wondering what exactly it means and what it's all about. So I'm going to go to you first, Josephine. Just bare bones definition. What is Bitcoin? And when people hear cryptocurrency, what does that mean and how do they connect?
The most basic level, Bitcoin is a way of trying to encode currency into bits, into something virtual that is protected by encryption so that when any transaction happens, there's a way to keep a public ledger that says this Bitcoin wallet made a transaction with this other Bitcoin wallet in this amount.
And just to be clear, it's digital. It's not. There's nothing physical. Not a physical coin like we sometimes see in images. That's just representative of the fact that this is a digital currency.
Absolutely.
All right. So I want to know, Gary, talk to me. How does it work? How does someone buy Bitcoin, and then how do they use it?
It's very similar to asking how does the internet work. And before we had the internet, someone wanted to make a long-distance phone call from Rochester to Buffalo, and you'd have to pay AT&T as a middle person in the process to make that transaction happen, to make that communication happen. And so Bitcoin is simply the digital representation of trust, peer-to-peer trust, which means it's decentralized. There's no single person, no single company, no single group of people who are making decisions for the Bitcoin to process. And so, as Josephine was saying, this is a digital ledger, but instead of a traditional ledger, which is controlled by just one main organization, this is controlled by mathematics and everyone in the world participating in Bitcoin.
And so in terms of, if I said, hey, I want to get some, how would I even go about doing that? Is it online? Is there a location, since it doesn't actually have this central location of existence?
So there's a couple different ways that you could go about getting Bitcoin. The easiest way would be to go through, at this point, a financial institution called Coinbase.com. You can go to Coinbase.com. You can buy just a fraction of a Bitcoin, a millibit. So you don't need to purchase one whole denomination of a Bitcoin. You can purchase Bitcoin at Coinbase.com, and then you can transfer that Bitcoin from your Coinbase wallet to a more secure wallet like a Trezor or a Ledger Nano S.
So it's a lot of terminology that people aren't familiar with or used to. So why, I guess, what would it benefit me then to purchase something with Bitcoin as opposed to my Visa debit card, for example? How do I win? Do I win in that process?
So there are a couple reasons that we see people purchasing Bitcoin. Some people are investing in them because they think the value is going to go up. Some people like it because they like how decentralized it is. They like the idea of sort of liberating their money from government-run financial institutions. And they see Bitcoins or other cryptocurrencies as a way to sort of extract their finances from those fairly heavily regulated institutions. And then there's also, I think it's important to note, a fairly substantial population of people who only end up buying Bitcoins because they need them to make ransom payments for ransomware or other types of cybercrime, because they are much harder to trace than, say, a credit card transaction. If somebody comes and infects your computer and holds your hard drive for ransom, they're not going to want to get a credit card payment from you, because then your credit card company can trace who it goes to. They're going to make you buy Bitcoins and pay them with that.
So it's kind of like a double-edged sword. This is anonymity, and on one hand, if you don't want to give somebody your credit card number and that kind of a thing, you don't have to. But then on the other side, there's a cybercrime aspect. And I guess my question: if there's no central location, government, for example, monitoring what's going on and able to trace it back to different people, I guess that's slightly concerning, right? Or is this something that could potentially change, just in terms of tracking and monitoring and seeing who, in fact, would be making different transactions?
So I'm very excited that we're talking about this, and as you mentioned, there's a lot of different terminology, and with all of the different terminology, there's also a lot of misconceptions. And so part of the misconception is that Bitcoin is anonymous, and that what you do, the actions that you take, the transactions aren't being monitored and can't be traced, when in fact, there are reports that up to 50% of every single transaction on the Bitcoin network is traced and can be tied to a user's identity. There are companies that are existing specifically to track and monitor the transactions inside the Bitcoin network. So having the privacy is one aspect, which there isn't, it's not 100% private, it's not 100% anonymous, although there are other cryptocurrencies that do have a much higher level of that privacy. Bitcoin doesn't. And the second part with the regulation, the governments are monitoring Bitcoin and cryptocurrency. The governments can continue to create regulation and to regulate people from using Bitcoin, but it's not possible to put the genie back in the bottle or to shut off Bitcoin. The rules can be made saying that people aren't allowed to participate, but Bitcoin exists and Bitcoin will continue to exist.
Definitely seeing more interest, though, from governments, and say in the United States from the SEC, and in other countries from their financial regulators, in trying to place some restrictions and trying to bring some of the financial regulations that apply to banks, that apply to other types of institutions, bring them to bear on the Bitcoin exchanges. I think a lot of that focus has been on those places where you actually see people trying to turn Bitcoin into real money, for lack of a better term. And a lot of governments sort of trying to get a better sense of who's converting Bitcoins into non-virtual currency and keeping records of how that's happening. So I certainly think we're already seeing more activity there, and I would expect that we will see more interest from governments in that space.
Well, we saw this dramatic increase in 2017, just in terms of Bitcoin hitting nearly 20,000, and then this week it fell below 10,000, and then this morning 11,000. And by the time this actually gets to air, who knows, where it will be. So what's going on with the surge and the interest? I'm curious, what's happening?
From our perspective and what we're hearing in the community, more and more people are starting to ask themselves, what is money and what is real money? And part of the problem that people are experiencing is that the $100 bill that's maybe in your pocket right now, in a year from now, it's still going to be a $100 bill. It's still going to say a $100 bill. It's still going to have Benjamin Franklin on it. But is the purchasing power going to be more or less than it is today? And as a historical reference, the value of money decreases every year because inflation increases every year. So the buying power of a dollar bill is designed to go down in value. So by simply holding cash, people are losing value. That's why they're looking for investments. And not only is Bitcoin decentralized, run by mathematics, governed by mathematics, consensus through every single person that uses it, but Bitcoin is also limited. So there's never going to be more than 21 million Bitcoins. And if everyone in the world wanted one, with 43 million millionaires in the world, everybody can't have one. So the supply and demand is interesting to look at.
We have to close, but quick question. Billionaire investor Warren Buffett says he doesn't see this working out in the end. I'll ask you, one of you, just jump in quickly. Do you think this is financially stable long term? 10 seconds.
Stable, no.
Stable, absolutely.
Okay, two great differing perspectives. Thank you both. A huge thank you to my guests for weighing in on this topic and for sharing your expertise. WXXI News will continue its coverage of the Bitcoin craze, cryptocurrency, and what it all means for you. Just go to our website, WXXInews.org.
Thank you for watching this content and learning about this information with me. Don't forget to tap that like button and subscribe. It encourages us so much and it helps other people find this content. Also, if you're interested in behind-the-scenes access, special rewards, and a direct connection with me and our crypto community, then become our patron at patreon.com/mintingcoins or via our website at mintingcoins.com/join. We look forward to connecting with you because together, we are minting coins.